Hello, everyone, and welcome to today's webinar. My name is Anna, and I'm with the New Mexico Small Business Development Center. Today, we have Peggy McDonough joining us, who is a certified SCORE mentor. Peggy holds an MBA and is a CMA with 30 years of project management and finance experience. Peggy will be presenting Are You Tax Ready? PPP, EIDL, and ERTC implications. We will be using the Q&A function to take questions and welcome attendee participation, so don't hesitate to ask us any questions you may have. We'll answer those at the end of the webinar. If you have any technical issues, I can address those within the chat feature. Thanks so much for joining us, and without further ado, I'll hand it over to you, Peggy.
Thank you, Anna. Well, I wanted to welcome you all. As Anna mentioned, I am a SCORE certified member. And SCORE and New Mexico Small Business Development Center, we work in collaboration to provide small business owners with professional training and support. And that's what today's webinar is an example of. And we hope you'll find your time today productively spent and useful for your business. So as Anna mentioned, do not use the chat function during the webinar. We will not be monitoring chat. Please write your questions and the slide number, if at all possible, in the question and answer feature in Zoom. And we will address any questions you may have at the conclusion of the presentation. Now, SBDC is prohibited from giving tax or legal advice. So if you have any tax-related questions, any accounting questions, or specific questions about your company, those can only be answered with credible authority by your accountant or your attorney. So please keep in mind that the information we're covering today is changing rapidly, and it's based on current understanding of the programs. It can and likely will change and has changed through the times that I've been giving this presentation. And although we will be monitoring and updating this webinar as new information becomes available, please do not rely solely on this for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. So what are some of the goals for today's webinar? I'd like you to walk away from this webinar with a better understanding of the tax implications and impacts for various COVID relief programs that have been signed into law by Congress in the last year and 9 months or so. We'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriations Act that was signed into law in March of 2020. And we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. I'll also talk a little bit about the most recent bill, which was signed into Congress, which is the infrastructure bill and the implications it also has on some of these programs. But I want you to walk away from here with more knowledge and with guidance on what questions you need to be asking your CPA, your tax attorney, or your payroll professionals in order to make the best decisions for your business. So today we're going to focus on 3 specific programs. We're going to focus on the Payroll Protection Program, usually called a PPP. We're going to talk about the Economic Injury and Disaster Loans and Grants, also called EIDL. And last but not least, the Employee Retention Tax Credit, or ERTC, sometimes also called ERC. We're going to be reviewing the timelines and some of the background, give you a better understanding of why we are here and how we got here. We'll talk about some of the tax implications and also some of the frequently asked questions to give you an idea of what people are asking out there about these programs. And at the end, we'll have a Q&A to address any additional questions that you may have. So let's get started with this timeline. So on March 6th of 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. Now, what this act did is it declared the COVID-19 outbreak a disaster under the Small Business Act. And this opened the door for the Small Business Administration to use its lending authority to make EIDL loans for small businesses that were impacted by the pandemic. Then shortly after, just a couple of weeks, as a matter of fact, they signed into law the CARES Act, or the Coronavirus Aid, Relief, and Economic Security Act. This one created the Payroll Protection Program and provided nearly $349 billion for PPP loans. In early May of 2020, Congress provided an additional $320 billion in funding. EIDL was also, it introduced the grant to pay SBA EIDL applicants in advance on their EIDL loans. And these advances were treated as tax-free grants and did not need to be paid back. But these funds were very quickly exhausted in July of 2020. The Employee Retention Tax Credit was also created. The ERTC is a fully refundable tax credit for employers equal to a percentage of qualified wages. That includes health plan benefits and expenses that are eligible employers pay to their employees. In December 28th of 2020, the Consolidated Appropriation Act was signed into law, and embedded in that act was some more additional $900 billion in COVID relief. There, $300 billion was in aid for small businesses, $284 billion of it for first and second PPP forgivable small business loans, as well as $220 billion to provide EIDL grants to businesses in low-income communities. So you can see as this money progressed through the year and with the COVID pandemic, it got more targeted and targeted as to who they wanted the money to go to, who the government wanted the money to go to make sure that small businesses did get money, and people that particularly needed that in low-income communities became eligible for it. In March 11th of this year, there was the American Rescue Plan Act of 2021, and that was $1.9 trillion. It was voted on in March 10th, and it was signed by President Biden on March 11th. Among other things, it provides small business assistance, including specific programs for restaurants and live venues. Again, more targeted money to make sure that it got to the people that needed it the most. And on March 30th, 2021, there was the PPP extension law that extended the application deadline for PPP. And in red here, and this is the most recent, is the infrastructure bill. Now that was passed by Congress on Friday, November 5th, and it was signed into law by President Biden on Monday, November 8th. And the reason I'm bringing that up is because this particular bill, in order to fund it for infrastructure, has gone out and swept up a lot of the money that was still out there in several of these programs. And I'll go over what has been swept up and what is still available. So interpretation, exactly what does or did Congress mean? So it impacts a great number of organizations. The IRS is impacted, SBA is impacted, banks, CPAs, and of course you as business owners. Now, part of the problem is the Treasury and IRS tax laws and guidance have lagged in a lot of these bills, and they are confusing. And in some instances, they send out contradictory messages. There's new forms that need to be filled out, new applications that need to be filled out, new tax laws that are implicated. There's confusing interpretation in a constantly changing environment. And that means that you're going to deal with business situations and tax implications that you've never seen before. So let's talk first about the Payroll Protection Program. Now, the Payroll Protection Program, as far as the application process, is closed. We're now into what is called the forgiven portion of the program. But the PPP itself is an 8 to 24 week period. There were two draws. There was the first draw that was from the CARES Act, and that PPP loans could be used to help fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operations. Unfortunately, the money was scooped up by large businesses very quickly, leaving the small business owners unable to apply. So the second draw occurred, and that was part of the Consolidation Appropriations Act in December of 2020. And that allows for certain eligible borrowers that previously received a PPP loan to apply for a second draw PPP loan with the same loan terms as their first draw. As I said, the application process ended in May, so we are now in the forgiving process of the loan. So what is a loan forgiveness clause? Now, a borrower can apply for forgiveness once all loan proceeds for which the buyer is requesting forgiveness have been used. So borrowers can apply for forgiveness anytime up to the maturity date of the loan. If the borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then PPP loan payments are no longer deferred, and borrowers will begin making loan payments to their PPP loan lender. To apply for forgiveness, you can work with your PPP lender. And there's also been developed as of August of this year, it's called the Direct Forgiveness Portal for participating lenders. Now, what this is it's a website, and you can get to it on the SBA.gov website. It's a great idea. And what it does is it allows smaller lenders to participate in this portal. And you can get on the portal and you can directly work with your lender from that portal, and you get your money faster, or you get your forgiveness faster, and you get your application for forgiveness happens much more quickly. So if you're in a smaller local bank where you got this funding, and they're participating, and they should have sent you an email if they are, then this is a great way to get your forgiveness done very quickly. If you're with a larger bank like Citibank or Wells Fargo, they usually have their own websites and they're not using this particular portal. But again, you can find out all the information on the SBA.gov website. And one of the nice things too is SBA offers free counseling and training to help you with the Paycheck Protection Program if you have any questions. Now, the CARES Act spells out that the forgiven loan amount won't be included in taxable income. You don't pay taxes on the money you receive. This loan is to provide businesses with the money to keep running and continue paying their employees. It's never been meant to create a tax burden for businesses that receive these funds. With the passing of the Consolidated Appropriations Act, more clarity on how the expenses covered by a PPP loan will be treated was given. So previously, anything you spent your PPP loan on was not going to be tax deductible. Now, with the CAA Act, now these expenses are tax deductible. So simply put, your PPP loan will not affect your tax filing process. So historically, if you have a business loan and it is forgiven, that automatically is taxable income. It's been in the Internal Revenue Code forever. However, with the PPP loans, they broke from that code. Congress specified and the IRS has clarified that forgiven PPP loans will not count as income. This applies whether your entire loan is forgiven or just a portion. Again, I reiterate that this loan is to provide businesses with the money to keep running and continue paying their employees, and was never meant to be a tax burden for businesses receiving the funds. Again, simply put, your PPP loan will not affect your tax filing process. So though Congress has walked back the IRS's stance on the PPP and its relation to deductible income, that doesn't necessarily mean you can leave these funds out of the conversations on your 2020 and your 2021 taxes. Whether you receive PPP funding in its first iteration or later on in 2021, you should still be careful when it comes to taxes. There are a lot of unanswered questions, and some of these questions stem from confusion in the application process. So in some cases, application woes meant businesses received money that they weren't qualified for in the first place. For example, a company might have stated that it had employees when it only had independent contractors. And while that might seem like a case of semantics to the layperson, that kind of difference could have major implications when it comes time to file business taxes. Now, one of the things too that I think a lot of people were interested in hoping that would happen is because as the PPP program matured, they found a lot of money was either handed out incorrectly or there was fraud and the money was being repaid. And there was hope that with all of this that was going on, the additional funding that was coming back for fraud and people who were paying, that they would have another draw and allow businesses to take some of that money back out again. Unfortunately, with the Infrastructure Act, they have swept up all those funds and they will no longer, there will not be a third draw for the PPP. Now, how your funds are used is important to keep in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements will have to be reported as income and expenses in their business tax return. So please keep clear and concise bookkeeping. Your signed PPP loan contract stated you would produce monthly government-ready financials. So you are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. It's always best to keep separate accounts to identify your PPP loan. It's important also to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. So if you received a PPP loan, expect a tax audit. Now, it doesn't mean you're going to be audited, but be prepared. In recent months, the SBA and the U.S. Treasury have announced that all PPP loans in excess of $2 million, they will be audited. Loans that are less than $2 million are subject to an audit. And of course, much lower loans have been and will continue to be scrutinized. There's a high probability that the IRS will audit you. So, and the IRS has set up a hotline for anonymous callers to report possible fraud. So how do you ensure a smooth audit process? Don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and PPP documentation should be kept on file for at least 6 years after your PPP loan is fully repaid or forgiven. Make copies to send, but always retain your originals. And hire a CPA who can represent you and defend your business against the IRS if necessary. So here are some of the frequently asked questions. Does my PPP count as taxable income? No. Funds from your PPP loan, whether forgiven or unforgiven, are counted as no funds from your PPP loan are counted as taxable income. You will also be able to claim a deduction for expenses using your PPP funds. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. And even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? No. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments, or mortgage interests. PPP loan proceeds can't be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Now, businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. Will PPP loans be audited by the IRS? As I said previously, according to the U.S. Treasury, all PPP loans that exceed $2 million will be audited. The IRS may also audit all other loans, so it's always best to be prepared, even if you received a much smaller loan. Now, does your state does your state tax forgiven, do they tax forgiven PPP loans? We're lucky in New Mexico. According to this chart, New Mexico does not tax forgiven PPP loans, but please check with your CPA to confirm this, as things do and have and can change. So next topic is EIDL, which is the Economic Injury Disaster Loan. It also has been impacted by the infrastructure bill, but not as much. The good news is here that they still have money for EIDL. Now, it is a loan option. It's available through SBA. While the PPP, you have to go through a lender. This one, you go through it directly to the SBA to help businesses struggling with financial hardships due to COVID-19. Now, one of the newest things that has just come out here recently in the last month or so is the fact that they've increased EIDL, where before you could only borrow up to 500,000. Now you can borrow up to 2 million. So they've really increased the ceiling of these loans. Now, although these disaster loans have been available for years, EIDL was signed into law on March 2020 as part of the CARES Act, which was passed by Congress to provide emergency relief to American workers and small businesses that were struggling to survive during the pandemic. If you are a small business, nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees, and you suffered economic injury as a result of the pandemic, you can apply for the COVID-19 EIDL. These loans, as I said, do not go through a lender. They come directly from the SBA disaster assistance, and there's no cost to apply. So you can find that at disasterloan.sba.gov if you are interested in this program. Now, the EIDL is a loan, and it's treated the same as any other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. But what about the EIDL grants? Now, there are several EIDL grants out there. Small businesses impacted by COVID-19, you could be eligible for what's called a targeted EIDL advance grant of up to $10,000, as well as a supplemental targeted advance of $5,000. These grants do not need to be repaid. The SBA is now encouraging all eligible businesses to apply. The grant program was part of the initial CARES Act in 2020, but the funds, again, were exhausted within weeks. So in December, Congress allocated additional funds for the program and established more targeted eligibility criteria. But, and this is important, to be considered for one of these grants, your business must meet the eligibility requirements and apply for an EIDL loan. So you have to apply for the EIDL loan in order to be eligible for the grants. However, you do not have to get or receive the loan in order to get the grants. So do I qualify for a targeted EIDL advance? Well, you have to be located in a low-income community, and you have to have suffered and that's an and you have to have suffered an economic loss greater than 30%, and you have to employ not more than 300 employees. In addition, the business must qualify as an eligible entity as defined in the CARE Act, and this is right out of the CARES Act. A small business cooperative, an ESOP or tribal concern with fewer than 500 employees, an individual who operates as a sole proprietorship with or with employees, or as an independent contractor, or a private nonprofit or small agricultural cooperative. The business must have been in operation by January 31st of 2020, and the business must be directly affected by COVID-19. Now, I've put this in red in the bottom because one good thing, as I said, these funds have not been swept up by the infrastructure bill, but applications will be accepted through December 31st. That's when this program ends. So what exactly is an economic loss definition? Well, it's the amount by which the gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 17th of 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020 or during 2019. So how do I demonstrate an economic loss? Well, getting your business tax documents organized and up to date will be essential for applying for this grant and demonstrating you qualify. Well, how do I know whether I'm in a low income area? Now, the SBA has released an online tool to help borrowers understand if they are in a low income area. Now, I want you to note that the business address must be located in a low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income community eligibility requirement before you apply. What you do is you get into this tool, which again is on the SBA.gov site, and you put in your zip code, and it will take you right down to the street level to let you know whether your business is located in a low income area. So what are the new $5,000 supplemental grants? The American Rescue Plan of March 2021 included $5 billion in funding for supplemental targeted advances or grants of $5,000 to the hardest hit businesses. So how do I qualify? Again, this is an additional grant of $5,000. So you need to have suffered an economic loss of greater than 50% and employ not more than 10 employees. You can get this supplemental grant in addition to the targeted grant of $10,000. So you could have a total of $15,000 in grant money. The SBA will reach out to small business owners who have applied for the targeted advance if they appear eligible for the supplemental grant. Getting your business tax documents organized again and up to date will be essential in applying for this grant and demonstrating you qualify. Now, one of the things I really want to bring to your attention here, if you're interested or think you can qualify for this supplemental grant, you need to get your application in by December 10th. And there's a reason for that. These supplemental grants have additional clauses and laws. And if you don't get your application in early, they may not be able to process it by the 31st because of the additional regulatory requirements. The EIDL grant initially funds from the EIDL advances were to be reported as taxable income, but this decision was reversed under the Consolidated Appropriations Act. It does not need to be included in your taxable income when filing your taxes. Additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarifies that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and the EIDL grants will not be deducted from PPP for loan forgiveness purposes. But please check with your tax advisor about tax implications at the state or local level. Will EIDL loans be audited? Well, when you receive an EIDL loan, you agree to spend the funds provided for certain business expenses. And as part of your loan agreement, you agree to maintain records and provide those records to the SBA to be audited if necessary. Now, while there's a chance you may not be audited, please don't skip this critical step. Maintain your records and be prepared to respond if an audit occurs. Does an EIDL count as a taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. How do I qualify for a targeted EIDL grant? If you previously applied for an economic injury disaster loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for an EIDL, please do so at sba.gov. If your business appears eligible you'll be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply again at sba.gov. You will be able to apply for the low interest rate loan through December 31st, 2021, as long as funds are available. If it appears your business also qualifies for the targeted advance or the supplemental advance, the SBA will invite you to apply. Can an EIDL loan be forgiven? No. EIDL loans, they're not advances. They need to be repaid over 30 years. It's a very low interest rate. I think it's 3.75. And unlike PPP loans, there is no forgiveness process for these loans. Can I also apply for a Paycheck Protection Program? And this is yes, absolutely. You could have applied for a Paycheck Protection loan and you could have them both. And you may be fully forgiven if they are spent on certain expenses, the PPP, which essentially turns them into a grant. And again, as I said, the PPP loan program is now closed to new applicants. However, if your business received a PPP loan, you may still be eligible for an EIDL loan and or grant. Businesses may apply for both PPP and EIDL if they qualify. So now let's go into the employee retention tax credit. And guys, this one is was really a nice benefit. Now, unfortunately, with the infrastructure bill, they have changed this where before the ERTC, it was available to small businesses through the end of this year. They have now changed that, and it is now only available through September 30th. Now, that doesn't mean if this is something you're not aware of or you want to check into, you can go back and apply for it in previous quarters. So I will go into what forms you need to do if this is something that you think you can take advantage of. And I tell you, it's a great program. So the employee retention credit is a tax credit that was first put in place last year as a temporary coronavirus relief provision to assist businesses in keeping employees on their payroll. And since then, the ERC has been significantly expanded. And in the most recent relief bill in January, the ERC was extended for all of 2021. Now, since the infrastructure bill, the funding has backed the date to September 30th. It no longer is December 31st. Now, there were different rules between 2020 and 2021. And these rules were that in 2020, you had to have 100 or less qualified FTEs or full-time equivalent employees. In 2021, 500 or less qualified FTEs. In 2020, the tax credit was up to 50% of $10,000. But in 2021, they increased that to 70% of $10,000. So this credit is available to businesses with fewer than 500 employees, 100 in 2020, who either were suspended or partially suspended their business to COVID-19 because of government order, employers, or, and please note that this is an or, not an and, or you experienced a 50% for 2020 or a 20% for 2021 decline in gross receipts when compared with the same quarter in the previous year. Now, we're all aware that there were a series of New Mexico government health orders in 2021 and 2020, and each order was effective for different dates. They were even effective for different businesses. So for details on who was impacted and the dates when those orders were effective, you can go to newmexicohealth.org, and there's you can click on public health orders and executive orders, and that will give you the dates of these orders to see if you qualify for that first qualification there, which is suspended or partially suspended their business due to COVID-19 because of government order. So there is a nice handy site out there for at the newmexicohealth.org where you can find that information. Now, these tax credits are incredibly valuable because unlike a deduction, which reduces your taxable income, tax credits reduce your tax liability on a dollar for dollar basis. And the credit is calculated per employee and is 70% or 50%, depending upon the year, of up to $10,000 in qualified wages paid per quarter. Now, qualified wages include the portion of your employee's earnings that you pay and is reported on your IRS Form 941. So is this credit taxable? Well, yes and no in a way. The ERC credit is subject to income tax. Wages on the claimed credit must be reduced by the amount of the credit, which kind of in a way results in the credit being taxable income. Reduction in wages may also impact Section 199A eligible wages for purposes of the 20% qualified business income deduction. So if the credit is claimed on 2020 payroll taxes after the tax return has been filed, you can file an amended tax return. Maybe it is required to accurately exclude wages that were reduced for the ERC. Bottom line, guys, is there's no double dipping also between PPP and ERTC. Both are payroll provisions. So let me give you an example. And this is strictly a theoretical example that came out of my head. It's not a real company. So let's say you have Star Technical Support. They're a small business in Roswell, New Mexico. And when comparing Q2 of 2020 to Q2 of 2019, Star Technical Support experienced a 55% decrease in their gross receipts. In order to qualify in 2020, a greater than 50% decrease must be met, and therefore Star qualifies for the 2020 ERTC. Now, in Q2 of 2020, Star also received $12,000 of PPP. So Star Technical Support, they have 5 employees, and each full-time equivalent employee is paid $8,000 per quarter. And now that includes their health insurance benefits. In Q2 of 2020, Star paid their employees $40,000. That's the 5 employees times the $8,000, which is $40,000. Now, ERTC is at 50% in 2020. So 50% times the 40,000 in wages is equal to 20,000, but they also received a PPP. So they need to subtract that from the $20,000 credit, but it still leaves them with an $8,000 credit, ERTC credit. Here's another example. And this again is another theoretical company. And I'm going to talk about Q1 of 2021. This company is called Fred's Fantastic Car Wash, and they're located in Los Lunas. When comparing Q1 of 2021 to Q1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. In order to qualify in 2021, a greater than 20% decrease must be met, so they qualify for the ERTC. Now, Fred's Fantastic Car Wash, they have 10 employees, and each employee is paid $7,000 per quarter, again, which includes their insurance benefits. Q1 of 2021, Fred paid their employees $70,000. Now, the ERTC is calculated as 70% times 70,000, which is equal to $49,000, with an annual estimated credit of 2021 of 196. Now, because of the fact that Fred is not able to apply for the last quarter of 2021, you would have to lower that by $70,000, but it's still a basic of $126,000 credit that Fred would be eligible for 2021. So what's the differences between the 2 years? Well, in 2020, you had to have less than 100 employees. Now it's 500. The gross receipt tax decrease in 2020 was 50%. Now it's 20. And the wage credit per employees was 50%, and now it's 70%. So a big change between the 2 years. So how do I file? If your business was not in existence in 2019, you can use the average quarterly wages paid in 2020. There are some exclusions. You cannot use the owner's pay or the owner's relative's pay when calculating wages. Now, there's a lot of discussion out there on between the CPAs and the interpretation of this. So please check with your CPA on this if you have any questions, because interpretation is muddled and muddy and contradictory at best. So please check with your CPA. File to apply this credit using your standard quarterly Form 941. Now, if you want to file in advance, you could have used Form 7200, advance payment of employee credit due to COVID-19. But if you haven't taken advantage of the ERTC in either 2020 or 2021, you can file retroactively using Form 941-X, which is the adjusted employer's quarterly tax return. How long do I have to file for a tax credit? Ladder of 3 years after the original filing or 2 years from paying the tax. But please, there's a lot of nuances in filing for the ERTC, so get advice and help from your payroll expert, preferably a professional who is well informed on current interpretations and laws. Now, while the ERC is certainly a taxpayer-friendly relief provision, the IRS is not just giving their dollars away. They're looking at taxpayer submissions both on the front end and then auditing them later down the road. So the best practice is for the business to provide contemporaneous documentation now when first determining whether they qualify. So to avoid your headaches and your heartaches down the road, businesses need to have counsel to properly and fully document in paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for the ERC, and please don't miss out on this terrific tax incentive. So here are some of the frequently asked questions. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. Congress in the CAA, or the Consolidated Appropriations Act, removed the limitation on only claiming one or the other. So PPP will only account for about 2.5 times your monthly payroll expenses, and it's meant to be spread out over 6 months. But this leaves plenty of uncovered wage expenses for claiming ERC. My business did not have a drop in gross receipts of 50% or more. The CAA has changed the qualifications so that a reduction of 20% now qualifies for 2021. But remember, there is another way to qualify for the ERC if your business has been subject to a partial or full suspension due to a government order, and you can qualify for the ERTC. My business was not shut down during the pandemic. Even a partial suspension ordered by the government, either whether it's federal, state, or local, of your business could potentially qualify. A partial shutdown, a disruption in your business, the inability to access equipment, having limited capacity, shutdowns of your supply chain or vendors. We're all experiencing that. Reduction in services or offered, reduction of hours to accommodate sanitation, shutdown of some location and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify you for the ERC. So some of the key considerations are due to government order, partial or full suspension. It is or was, your business was not able to continue its activities in a comparable manner, and it did that result in a more than nominal impact on business operations. Remember, partial or full suspension is an alternative way to qualify for the ERC, separate from the reduction in gross receipts test. Well, my company was deemed an essential business, so I do not qualify because of the business suspension. Even if your business is deemed essential, an impact or change in your business could still qualify you. For example, even if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. My company has grown during quarantine. This isn't something I should take. Well, it's great news that your company has grown during quarantine, but you still could have experienced a full or partial suspension. There are expenses that may qualify you. Well, sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of the CAA, you have the option to look at 1 quarter prior to determining qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. Now, this is a refundable credit. And in practice, this means that any credit overage above tax liability is sent to the taxpayer or the business owner as a refund. My company has grown to over 500 employees, so we're not eligible for the ERC. The employee count restriction is based on full-time equivalent employees, which is a more involved calculation than just counting everyone in the office. So if you paid any employees to not work or work less than the hours for which they were paid, then the employee count restriction would not apply for those employees. I'm a charity, and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. Charities can be particularly good candidates for the ERC. Failure to document. The ERC is a refundable tax credit and it provides robust benefits, as I've explained to you. If you had to draw a tax provision that makes the IRS lie awake at night, and gosh knows we all would like that, it would be a refundable tax credit that involves real dollars. But again, there are a lot of nuances in filing for this credit. So please make sure you work with your payroll professional to make sure you get the full credit that you are eligible for. So let's recap. So what is the process? Well, Congress votes, they enact laws, they provide government funding, or take it away as the case may be. The IRS, the SBA, state and local governments, they interpret the law and the tax implications. They create new forms and reporting requirements. CPA follows the interpretations and provides guidance to the taxpayers. What's the result? Confusion, restating and clarification, sometimes nuances, or they contradict themselves. So your 2020 or 2021 taxes are going to look a little different than they normally do. This means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So it's imperative that you have accurate and up-to-date set of books, such as your balance sheet and your income statement, that you track and categorize all your business expenses on both balance sheet and P&L, that you have receipts and invoices, and they should be digitally filed and recorded. Take the time. It's well worth the effort to be able to see where your money is going and to ensure you'll be able to get the most of your eligible deductions come tax season. Please keep in mind this information is changing rapidly and is based on current understanding of the programs. It can, and as we get closer to the end of the year, will change. Although we'll be monitoring and updating as new information becomes available, please don't rely solely on this presentation for your financial decisions. We really encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. But make sure that whomever you consult with, that they are up to date on the most recent guidance from the SBA, the IRS, or the US Treasury. That concludes the webinar today. Anna, do we have any questions in the Q&A?
Let me double check to see if anything's come in. No, I don't see anything. Please don't hesitate to ask us any questions. That's what we're here for. So I'll just give it a little while, or if you want to raise your hand, I can allow you to talk if that's easier for you. And in the meantime, just wanted to let you know that you can get a hold of us at NMSBDC webinars at sfcc.edu. And you can also check out our website. We are here for you during any stage of your business, so don't hesitate to reach out to us. We offer no cost webinars and no cost counseling services, so please visit our website. I still am not seeing anything in the chat. Let me just double check, or in the Q&A rather. So we are good, unless you have any other last words.
Well, I want to thank everybody for attending. We really appreciate your participation. So what's next? Well, hopefully we've given you some good information to take forward to your financial experts and grill them hard and ask them those hard questions to get the best benefit that you possibly can get out of the money that's available as it starts to dwindle, as well as take advantage of some of the tax credits. Thank you very much, Anna, and I think that concludes the webinar.
Yeah, thank you so much, Peggy, for all of your valuable information, and thank you to everyone who attended. Have a wonderful afternoon and evening.